Hey, what's up guys? Today I'd like us to talk about credit and debt. So credit is the ability to borrow money, while debt is the result of borrowing that money. When you use credit, you create debt, and over time your available credit will increase. The more debt that you have and you are paying back properly, months over months, then the higher your credit availability will increase, which we call credit limit. And please guys, leave a thumbs up, it really helps. It's kind of like compounding interest for YouTubers. A couple thumbs up today will greatly help me in the long run to grow this channel. So thank you guys. So credit is the available amount of money that you can borrow. So there's several ways that you can actually use credit. So there's credit cards, lines of credit, but then there's also loans like student loans or mortgages, for example. So there's a wide array of ways that you can use credit and then pay debt. Debt, on the other hand, represent the amount of money that was borrowed but has yet to be paid back. So let's say you make a purchase with your credit card of $500. Well, you have now $500 in debt, and every monthly payment that you make, or any payment that you make, even if you pay it in full, will go back into paying back that debt. Debt has really been promoted and embraced by our society, and that's really been pushed by big businesses and corporations, because for them it's like a very good thing, because now people can borrow money more easily. They can buy more than they actually could if there was no debt. Imagine a world where there was no credit, no debt available, where you couldn't borrow money basically. Well, imagine now you have a $1 million home or a $40,000 car. Most people would never be able to buy for that, or it would take them 40 years to save that $1 million. Whereas now, well, they can have mortgages, loans, and they can come up with that amount of money pretty much right away. The bank will just give them $500,000 or maybe $20,000 for the loan on the car, and right away they can get that car much more easily. And then they'll have to pay, monthly payments to pay back and shrink that debt over time. Yeah, the world would be completely different if there was no credit availability. Even though, as we just said, credit and debt can be seen as a good thing, okay? It can be a good thing if used properly. For a lot of people, it will slow them down immensely into trying to grow their wealth. And of course, all debt is not created equal, okay? So we talked about high interest debt, so anything above 5%, especially credit cards, if they have 20% interest rate, that's very high interest rates. So the way I would approach it, if you wanted to tackle and try to bring down all your debt, or at least the ones that you should really focus on, here's how I would proceed. I would come up with a list, okay, either paper-based or an Excel, and list all the different debts that you have, along with the interest rate associated with it. Then I would really encourage you to pay every minimum monthly payment that you have on this entire list of debt. The second thing that you would do is you would focus on the high interest debt first. Do not focus on the debt that has the smaller amount. If it has a small interest rate, just pay the minimum amount. Don't focus on it. Focus first on the one with the highest interest rate. So as we said, credit card, 20% interest rate, focus on those. Anything that's above 5%, you really want to tackle it down first. The reason why you don't want to focus on the one with the smaller amount, even though you might tell yourself it will feel good, because at some point in that list, I will knock down all the ones with the smaller amounts, or at least then my list is smaller. But when that might make you feel better in the short term, long term and in a wealth point of view, it doesn't make sense, because these smaller interest rates actually suck less money from your pocket than the high interest one. So you really want to tackle down the high interest one first. And then the next thing is then you really want to try to think about all the expenses you have every month and cut down as many as you can. Think about all the things you are spending every month, whether it is food, drinks with friends, maybe some subscription. Try to think about all these spendings that you have, cut down on as many as you can. Definitely remove anything that doesn't bring you, joy and happiness and greatly improve your general life and enjoyment. Cut down on those and instead put it back all into paying back those debts. Now, there's also a trap with quote-unquote good debt. Now, what we call good debt is typically like a mortgage. Well, the trap is that a lot of people will get pre-approved for much more money than they actually should borrow. That's a big chunk of your income that will go into paying back that mortgage, paying back that debt. And you run the risk, okay, if you lose your job, to very quickly run out of money, not being able to pay back the debt, and then you'll have to forfeit your house, and you lose a lot of money in the process. So it's one thing to be pre-approved. It might feel good, they allow me to borrow that much money, but that doesn't mean you should use the full amount. You really need to think about, okay, how much money am I bringing in every month, and how much is it realistic? How much should I actually be borrowing? Being able to doesn't mean that you should. Now, I want to talk about credit card. Okay, so credit card is a wonderful thing if you use it properly. Now, the one I have is a cashback. I personally prefer cashback because, I can always use cash. If it's travel point instead, I might not always be traveling. In some period of my life, might not be traveling at all. Whereas cash, I always need cash. So what I went with is I have a credit card with a 2% cashback. So meaning that for everything I buy, $100 worth of groceries, I'll get $2 back from the credit card issuer. Also, a lot of credit cards come with a lot of other benefits. So let's say if you buy a plane ticket with that credit card, you probably will get, potentially depending on the card, some coverage, health coverage during your trip, some travel insurance. You might be able to cancel your flight. So you don't need to spend this extra money for all these other coverage that traveling companies might try to sell you. Similarly, if you have and you buy a computer and you have a 1-year warranty, some credit card will give you added warranty. So let's say 1 year extra. So now you don't have only 1 year warranty on your computer, you have 2, which it's a nice perk. Over the long term, these small perks will add up to be actual money. Personally, the way I use my credit card, I do not use it really as credit. I use it for the perks only. So I'll buy something as long as I have the money to back it up right away. So for example, every month I'll use my credit card to buy groceries. If I buy any clothes that month, I'll use it. If I have any gas when I travel, I might use it. Plane tickets, pretty much everything that I'm buying. If I can use my credit card, I will use it just to get back that cash back and get all the perks. But I make sure that I have the money to back it up as soon as possible. So how I do that? Well, I just make sure that when I make the purchase, I have the money in my bank account already, in my savings account. And then I will make, payment every month. So in order to not forget, I just, in my schedule, on my phone schedule, I have, at the end of every month, I have 2-3 reminders, pay your credit card, so I don't forget. Because if you don't have reminders, you will forget. Okay, maybe not every time, but one time here, one time there, you'll forget. So really put some reminders on your phone, on your calendar, to pay back those credit cards, and just do it. Every month, pay it back. And if you forget, 1 month you forget, it's the first time, and for some reason you just skipped it, or maybe you didn't actually have the fun. For once you didn't have the fun, and that's okay. You can always call your credit card company and ask them and tell them about it. You just tell them, well, I'm sorry, I completely forgot. Could you please, refund me those interests that you made me pay? And in most times, they're gonna do it, okay? Because if it's not a very recurring thing and your credit score isn't going down, they will do it because they want to keep you as a customer, okay? And so the main reason why I would encourage any people who can use a credit card and get a credit card to get it as soon as possible is that in North America, you need to build that credit score. You want to build your credit score as soon as you can and just build it year over year. So that's including having a credit card and potentially having a line of credit, okay? And some big purchases, use your line of credit just for the sake of building your credit score. The reason being is once you'll be, let's say, in your 30s and you want to buy a house, instead of renting, having a strong credit score will give you the opportunity to borrow more money for better rates, better interest rates. If you never had a credit card, never had a line of credit, you have no credit history basically. Well, if you asked your bank to borrow money to buy, this $500,000 condo, well, they will be way more hesitant because they don't actually have data to know, are you going to pay it back? Are you a safe customer to work with? So that's why you want to start as soon as possible to use a credit card, use a line of credit, so that the system, the financial system, will get to know you, will get to know that, yes, Lucas is paying back his credit card properly, he's safe, so we can actually lend him a big chunk of money, and we'll actually give him like a pretty good interest rate on this mortgage, because we know that he's gonna pay it back, it's safe, we don't need to have added security by just bumping his interest rate. So that's it for this video. Thanks for watching, guys. Please, as usual, leave a like, a comment and subscribe, and I'll see you in the next one. Thank you.